Well, folks, in case you haven't been paying attention, we got Opendoor Drama. I'm talking Eric Jackson and the CEO. They kind of have a feud going on right now. We'll cover the latest with the Opendoor Drama, including really where the stock could be headed over the next couple weeks. We'll also cover the latest macro news, including President Trump's surprise Fed nomination and Vladimir Putin's latest peace offer for the war in Ukraine. As always, if you get value from these videos, make sure to like, subscribe, and follow wherever you listen to podcasts. And now, folks, let's roll. All right, so Opendoor's really been the talk of the market for the past month, really. And this past week, we got some additional drama to add fuel to the fire. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. All right, so let's jump right into this article from investing.com. Opendoor CEO Wheeler breaks silence. EMJ's Eric Jackson calls for more. So basically, just to catch you up, the CEO for Opendoor had an interview with Bloomberg last week and really didn't mention in any substantial way the retail community. Basically, she just said when asked about the resurgence in the stock price and the retail interest, she basically just said, quote, "It wasn't on my bingo card this year." And Eric Jackson, of course, took offense to this. I mean, we're talking about a company that was left for dead. And if it wasn't for the renewed interest from the retail community, this stock would be not a stock anymore, basically. So Eric Jackson viewed it as really a disgrace. I think he would agree with that term as far as, just Carrie Wheeler and, how she responded regarding the retail community. So basically that's what happened. And then Eric Jackson, he responded basically saying that she's got to go. And that's really when the fireworks started happening this past week. So according to investing.com, Opendoor Technologies CEO Carrie Wheeler broke a multi-day silence on Friday following a tumultuous earnings week that saw intensified calls from retail shareholders and activists for clearer leadership and a more ambitious strategy. Her social media post, the first on X in 4 years, came amid growing frustration over a lack of engagement, particularly after a widely criticized Tuesday earnings call and a sharp post-earnings share decline. So first of all, the fact that she hasn't even tweeted in 4 years, that's insane. I mean, look at Elon Musk. He tweets like every 4 minutes. The fact that you have a CEO for a supposed tech company that hasn't tweeted in 4 years is kind of a red flag. So let's take a look at this tweet that she put out for the first time in 4 years. There's been a lot of attention on Opendoor is, basically what she said. And it's like, yeah, well, of course there's been attention on Opendoor. I mean, the retail community has been holding this thing up. And she basically said, "It's an incredible gift. I'm deeply thankful for every new shareholder who believes in what we're building. Some are calling this a meme moment. If that means thousands of people choosing to own part of Opendoor because they believe in the long-term value and transformation we're driving, I'm all in. For more than a decade, we built a platform to empower sellers to let them move with simplicity, certainty, and convenience. That work has earned us an NPS of 80, proof we deliver outcomes that matter. Last week, we took the next step in that journey. We opened our platform to agents. We launched Cash Plus. Both expand seller choice and strengthen the real estate ecosystem. Opening our platform to agents means putting our superpowers in their hands, giving them high converting sellers and differentiating selling solutions, tools to win more listings and better serve clients. Our new product, Cash Plus, gives sellers the best of both worlds, certainty of cash now, potential to capture upside later, no more market FOMO." So the fact that she even put meme in a quote there, I just think it's kind of silly. So obviously, Eric Jackson is not happy with Carrie Wheeler being the CEO right now. And, honestly, it's kind of hard to disagree with him at this point. Basically, she used to be a CFO. Now she's the CEO for Opendoor. And the more I kind of look into this, the more I have to agree with Eric Jackson. I mean, let's just put it this way. A lot of people have been saying you shouldn't have a CFO running a tech company. And basically at this point, they're saying we need some new blood in there. We need someone who's really going to embrace this retail movement, capitalize on this opportunity the company has, and find a way to get things done for the business, right? So basically, Eric Jackson had a tweet from earlier this past week. He said, "I had a fascinating convo with @HeyJchu from Coleslaw Ventures this week. John is an Opendoor OG, helped build the company from the early days, now investing alongside Keith. I asked him, how real is the AI opportunity for Open? His answer surprised me." So basically, this is what he said. So what did I take away from this convo? Eric Jackson says the AI opportunity at Open is very real and large. It's not flashy, it's operational and high margin, but it needs real talent and real urgency and a tech-oriented, not finance-oriented, board/CEO willing to go full stack vertical, right? So Eric Jackson basically throwing a jab there at Carrie Wheeler saying, hey, look, you're finance oriented. This company needs tech oriented people. And, basically we need somebody new who's going to really lead this next phase for Opendoor as, we have, the promise of rate cuts on the horizon. It's really a bold opportunity for this company to transform a legacy industry like real estate, but they need the right people. He continues with this other tweet. John's words stuck with me. Quote, "You can actually mess with the industry by messing with the margin structure. That's what Carvana did. That's what Open can do. If they hire the right AI team now, Open owns the platform, and this is still a 100x setup." And honestly, I agree with him on that. I think, but first and foremost, they need the right people in there. I was on the earnings call last week when Opendoor reported, and I got to tell you, I was a little surprised at the lack of information or just acknowledgement that Carrie Wheeler gave regarding the retail movement that this company has seen. Say what you will about Adam Aron and AMC. He's done a lot of things bad for that retail community. But one thing he did really good at the beginning was acknowledging the retail crowd. And so far, I think she's done a very, very poor job of that. So things are getting spicy. We will see what happens there. And as far as that retail interest, if we take a look here from apewisdom.io, we have dropped down a little bit, but Opendoor is still sitting in the top 20 as far as, mentions on Wall Street Bets. This is definitely still on the radar. I would not count it out. And I think that the drama that we've seen lately just kind of adds fuel to the fire. So let's do a breakdown of what we saw this past week with Opendoor. We did close Friday at $1.95. So we are under $2. And if you've been following the show for a while, I've been calling out that, really the line in the sand, in my opinion, is that $2 to $2.21 range. If we get below that, doesn't look good in the short term for the bulls. If we can hold it, might be able to build a platform there. Now, I will say this, we had the selling pressure really from a volume standpoint. The volume, it just went down and down and down all last week if you take a look at the chart here. And so you can really interpret that a couple different ways, right? You can view that as interest kind of drying up, and I would counter that with what we're seeing on sites like apewisdom.io. It's still got a lot of retail interest. You can check StockTwits, you can check Webull, the popularity rankings. It's still there, right? So I don't necessarily think it's that. I feel more so that this is selling pressure that is starting to dry up. So, I think that's a good sign. And now we just need to see if buyers can step in. And if we can kind of regain that $2 level, you have this dynamic resistance that we have now here of 209 currently. This is the 20-day moving average. And one thing I pointed out on the last video, if you haven't seen that, we did a breakdown of the earnings for Opendoor, so make sure to check that out. But, basically we are creeping up to a golden cross, which is one of the most bullish indicators that you can get in the market. It's when you get the 50-day crossing above the 200-day, and it's an extremely bullish signal, and we slowly have this 50-day creeping up. So I'm very, very curious to see if we can get some price holding around this $2 level. If we can push back up early in the week, we're going to creep closer and closer to a golden cross, and that alone would attract a lot of technical traders, not to mention anyone else with eyes on this, maybe adding to their positions, seeing that as further confirmation. So that is very interesting to me. And as always, I got my Fibonacci level set out from the all-time low that we saw back in June and that 497 high that we had a couple weeks back. And so 221, that price level, is the 61.8% Fibonacci retracement level. And really what you want to see at this point is a reclaim of that. That's really the first, second, resistance level I'm looking to see the bulls take back. First would be $2 and then 221. Want to get back above that. Believe it or not, I don't really view $2.50 as this like major level. I think if we get above 221, really the next level I believe is going to be 274. That's the 50% retracement level, a very key psychological level there. So, as far as the technical setup, the fact that we did have some green on Friday was nice. We were up, about 5%. And so it does seem like we've kind of put a base in here after touching lows, right around like $1.70. So, we'll see what happens this week ahead. Also, the RSI on Opendoor right now is looking fantastic. It's currently sitting at 52. So keep in mind, this thing was, up near 90, 95 a couple weeks ago, extremely overbought. Definitely had to reset, definitely had to cool off. And now that we're sitting at a cool 52, it's definitely, reset. And that's a great sign moving forward for the bulls. Let's take a brief look here at the options chain for Opendoor. And, if we look at what happened on Friday, we had a put to call ratio at 0.45. So basically you got 2 times the calls being bought than puts. It's still a bullish options chain. And, really the implied volatility has come down quite a bit, currently sitting at 155%. The current IV percentile is 32%, meaning, basically over the past 52 weeks, 28% of the time, the implied volatility has been lower than it currently is. So it's becoming more attractive to be a buyer of premium given where things are sitting right now. And also keep in mind this too, that this week upcoming is a monthly options expiration date. So a lot of the volume that happens on really options chains in general happen on the monthly cycles, and we're coming up to one right now. So you could see some pretty interesting moves this week, depending upon what price does, right? Given the fact that you're going to have a lot of people either rolling those calls or puts or selling them, market makers needing to hedge and stay net neutral based off of, what all these options buyers are doing this week. So it's going to be very interesting. If we take a look at some of the, higher interest option strikes right now for Opendoor, you got about 55,000 open interest sitting at $3. That's the biggest one on the call side. And then really on the put side, you have the largest open interest right around $2 right now. So this week's going to be very interesting. I want to see if we can sustain some of the volume that, we saw from a couple of weeks ago. Yes, it's been dying off a little bit, but, I'm kind of viewing that again as some of that selling pressure starting to subside. So let's see if we can reclaim $2. And also keep in mind too, the fact that if we check on some of the institutional ownership, some of the institutional action that's been happening with Opendoor, depending upon where you look, you might get different numbers. Market B, for example, is showing 62% institutional ownership for Opendoor, whereas Fintel, I think, is right around 54%. So it depends on where you look. But still, obviously, a ton of institutions are very interested in Opendoor as it stands right now. And also, you got to keep in mind the fact that JP Morgan is now predicting that we're going to have quite a few rate cuts coming in this year, which is kind of a change of how they viewed things even a couple weeks ago. So I think that's pretty notable. If you check the CME Group website, the last time I checked, basically the odds for a September cut are baked in at this point over 90%. Now, as far as some of the latest action that we've seen is from an institutional level. These are 13F filings. These are basically just companies with over 100 million in assets under management that have either been, selling or buying in Opendoor. Some of the, most recent ones that I've been looking at, you got Citizens Financial Group on Friday that bought up 410,000 shares, of the company. You had a couple other ones here that closed out some small positions. So that's kind of where we stand right now. Not a whole lot of action of late as far as some of the institutional buying and selling. Obviously, a couple episodes back, we did cover the fact that Vanguard trimmed, about 20% of their position. You had BlackRock that trimmed a big portion of their position, and Context Capital that just, sold everything. So we will see what happens in the weeks ahead. I will definitely be paying attention to some of that institutional action to see, basically what are the big, what's the big smart money doing as it relates to Opendoor, and what do they make of Eric Jackson's call out for new leadership really in Opendoor. So let's move on to some macro news. S&P 500 rises, NASDAQ at record Friday as Apple shares rally. So if we take a look at the chart from Friday for the S&P 500, it's looking fantastic. We closed at 63.89. We got the all-time high at 64.27 for the S&P 500. And, I have some Fibonacci extension levels that I've been paying attention to. The next one is really 64.67. And I think we're most likely headed towards that. If we take a look at the tech-heavy NASDAQ via the ETF Qs, we are at an all-time high on that right now, which is pretty wild. Closed Friday at 574. If we take a quick look at IWM, which is the small caps, we got a golden cross here a couple days back. And, basically not a whole lot of action on small caps on Friday, despite the fact that you had, the NASDAQ up 0.9%, S&P doing great. IWM was only up 0.2% on Friday. And a brief check-in on the VIX. The VIX closed Friday down at 15.15. So coming off after that spike up to 21 that we saw last week. And really consumer confidence seems to be pretty strong right now. Let's do a quick check-in on Bitcoin. At time of recording, we are currently sitting at 117,026. This is TradingView. If anyone's interested in it, there's a link in the description. You can get $15 off. A lot of amazing tools on TradingView. But really, the fact that we're in this risk-on environment, which is evident from what we're seeing in the S&P 500 and really from, the NASDAQ and tech, the same would be true for really Bitcoin and crypto in general. Crypto in general is a risk-on asset. So I'm not surprised to see it, flying high along with the overall market. And then, of course, you had Apple. Don't forget about Apple. We talked about it on the last episode. They had, the announcement of $100 million investment, $100 billion investment additionally in the U.S. on top of what they had already promised. And, Apple is now breaking out, which has been helping the Dow. We had this consolidation on Apple for quite a while where 215 was really resistance. And then Thursday and Friday, you got the breakout on Apple, and it's moved considerably over the past couple days. It is back above the 200-day moving average. It closed Friday at 229. And as far as the options chain, it's looking pretty bullish. Put to call ratio 0.55. But I mean, the current IV percentile on it's 20%. If anybody had calls on, Apple prior to this move up, your premium imploded or exploded in a positive way very nicely. Just given the fact that it wasn't, having a lot of movement, and then you get a violent movement that causes premiums to expand, right? And so if anyone was involved in options calls in particular on Apple over the past week, you're probably sitting pretty. Let's move on to some of the latest macro news here. This, according to the Wall Street Journal, Trump will nominate economic advisor Stephen Moran to Fed vacancy. So President Trump said he would nominate Stephen Moran, the head of the White House Council of Economic Advisors, to fill a vacancy on the Federal Reserve's Board of Governors on a short-term basis. Trump tapped Moran in December to lead the CEA, and he was confirmed by the Senate to his current post in March. The president said that Moran would fill the role until the term expires in January. Quote, "In the meantime, we will continue to search for a permanent replacement," he wrote on social media. Trump had been telling allies as recently as Monday that he was considering Moran for the job. According to a person who heard directly from the president, others who were under consideration include former Trump economic advisor and Fed board nominee Judy Shelton, others said. So the reason this is interesting is because of the fact that we had a Fed governor, Adriana Kugler. She unexpectedly last week basically quit, said that she would leave the central bank this Friday, about 6 months before her term was set to expire. And so really this puts the White House in an interesting situation because there is no guarantee that they will have another vacancy before Fed Chair Jerome Powell's term ends in May of next year. And so when you have a vacancy like this, it's very, very important to keep tabs on what the administration does as far as who they put in there, because that is someone they potentially could see as replacing Jerome Powell. Doesn't mean that Moran will, but the fact that he gets nominated means he would be obviously in consideration being a part of the Federal Reserve. So I thought this was very interesting. And obviously, President Trump is currently trying to, figure out who he wants to replace Jerome Powell, which he's already said he's not going to fire him and let him, work out his term, which again ends next May. So something to keep tabs on there. We'll see how that goes with Stephen Moran, if he's able to get through. But as of right now, Trump has nominated him to fill that role. And so we'll be keeping tabs on that, as really you have a Federal Reserve right now that is, they're basically in a position where it seems more and more likely that we're going to get that rate cut in September. And really the question at this point, in my mind, is it going to be a 25 basis point cut? Is it going to be a 50 basis point cut? How many more are we going to have beyond that? As JP Morgan has alluded to of late, as I said earlier, they believe we're going to get multiple rate cuts this year now, which is a drastic change from where we were just even 2 weeks ago. So, we'll be keeping tabs on that. Okay, so moving on here, this also from the Wall Street Journal. This very interesting news related to, just on a global front. The war in Ukraine has been going on since 2022. And Putin, came out with some news over the past couple of days. So again, this from the Wall Street Journal. Putin tells U.S. he'll halt war in exchange for eastern Ukraine. Trump says he will meet with Russian leader in Alaska on August 15th. Zelensky rejects giving up land. So that's not a shocker. Obviously, we know Zelensky up to this point has been fighting for his country and doesn't want to give up any kind of territory to Putin. And of course, we know the whole reason the start is because Putin wants territory. So this is probably not a surprise to President Trump, but it'll be interesting to see how, President Trump will navigate this with Putin. So Russian President Vladimir Putin presented the Trump administration this week with a sweeping proposal for a ceasefire in Ukraine, demanding major territorial concessions by Kyiv and a push for global recognition of its claims in exchange for a halt to the fighting, according to European and Ukrainian officials. President Trump said Friday he would meet with Putin in Alaska on August 15th. Following Putin's proposal, he didn't provide additional information about the meeting or the exact location. The Kremlin didn't immediately respond to a request for comment. So obviously the world has been, waiting for some kind of resolution here. Obviously the U.S. has funded a lot of Ukraine's weapons, especially with the Biden administration. And then when Trump came in, when Zelensky first came over to the Oval Office, You have that now historic moment where they basically told him, look, we're not going to give you any more, funds, no money. And so this has really been a drag, obviously on the US, but also on the global front for the past few years. So it'll be interesting to see what happens with this meeting with Putin. Let's see if President Trump can get some kind of deal done. I would expect that the markets would obviously react positively to a war in Ukraine that is ended or even halted at this point. So we will be keeping tabs on that. Now let's move on to the economic calendar for the week ahead. So this week we're going to get an interesting peek at inflation. On Tuesday, August 12th, we get core CPI month over month for July. And as of right now, the previous was 0.2%. The forecast is 0.3%. Wednesday, August 13th, crude oil inventories. And then Thursday, August 14th, we're going to get initial jobless claims coming out at 8:30 a.m. Eastern, as well as PPI. And then Friday, August 15th, core retail sales are going to be very interesting. So we're going to get inflation data. We're going to get retail sales. I've said it before, but the consumer is a big part of this overall market that we operate in. And so when we're looking at something like core retail sales, it is, very, very important, as well as inflation. We want to see inflation stay low. That way, those odds of a Fed rate cut continue to be optimal for, 25 basis point cut in September. As far as earnings that we got going on this week, not a ton going on. You got Cardinal Health on Tuesday. The big one I would say is Wednesday, August 13th. You're going to get Cisco Systems reporting. This is going to be big, closely watched for AI and really Splunk-related strength. So I want to be paying attention to that. Additional reports, you're going to get AppLovin, Alphabet, Walmart. Those are some big names, Magnificent Seven names, right? Thursday, August 14th, they're going to get JD.com, Applied Materials. And really that's about it. Not a whole lot going on this week as far as earnings go. But really for me, the focus this week is going to be seeing what happens with Opendoor after we've now had a weekend to digest some of the drama that, what's happening between Eric Jackson and Carrie Wheeler. Yeah, she put out a tweet, first one in 4 years. Again, still shocking to me. That's been 4 years since she's put out a tweet. But let's see what happens in the week ahead. Look, in my opinion, Eric Jackson, he is known for being an activist investor. And I almost want to say, hey, put your money where your mouth is and take an activist position in Opendoor. Right now, he has a passive investment in the company, but he's basically been an activist on the side, not technically one as the SEC would view it, right? What would be a 13D filing for any of those curious, but I'll be curious to see what he does this week ahead. We'll see if we get any more news there. We'll see what happens with some of the key economic data we got coming out. We will be back as always for the midweek check-in. That'll be dropping Thursday, 8 a.m. Eastern sharp. So make sure to have notifications turned on for that. And we'll make sure to keep you updated on Opendoor and all things market related. Appreciate the support. As always, make sure to like, subscribe, follow wherever you listen to podcasts. And folks, remember, plan the trade and trade the plan. Have a good one.